This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices edged up slightly on Monday, supported by OPEC+'s plans to cut more output, while investors eyed Chinese economic data for signs of a demand recovery by the world's number 2 oil consumer. Brent crude futures nudged 6 cents higher to $86.37 a barrel by 0350 GMT, while U.S. West Texas Intermediate crude was at $82.56 a barrel, up 4 cents. Both contracts notched their fourth weekly gains last week, the longest such streak since mid-2022 after the International Energy Agency, IEA, forecast record demand in 2023 of 101.9 million barrels per day, BPD, up 2 million barrels of oil per day on last year.
Australia will make a cautious revision to its commodity price assumptions in next month's budget, Treasurer Jim Chalmers said on Monday, a move that will likely provide a boost to the country's expected revenues. Australia, the world's largest iron ore exporter and the second largest exporter of coal, currently assumes long-term prices of $55 per ton for iron ore and $60 per ton for thermal coal, significantly lower than current spot prices of $137 and $188 respectively. Chalmers told a news conference on Monday he had received guidance from Treasury officials that its current assumptions were outdated.
Moving on to the top news in the energy sector.
The Group of 7 rich nations on Sunday set big new collective targets for solar power and offshore wind capacity, agreeing to speed up renewable energy development and move toward a quicker phase-out of fossil fuels. But they stopped short of endorsing a 2030 deadline for phasing out coal that Canada and other members had pushed for, and left the door open for continued investment in gas, saying that sector could help address potential energy shortfalls. In the midst of an unprecedented energy crisis, it's important to come up with measures to tackle climate change and promote energy security at the same time, Japanese Industry Minister Yasutashi Nishimura told a news conference.
Oil and gas activity in the U.S. Midwest and Mountain West states declined in the first quarter and is expected to continue to slow, according to a survey released on Friday by the Federal Reserve Bank of Kansas City. The first quarter's drilling and business activity index decreased to -13 from 6, according to the survey, which polls energy firms operating in producing states like Colorado, Wyoming, Oklahoma and the northern half of New Mexico. Revenues and profits continue to decline significantly and are expected to continue contracting, said Chad Wilkerson, a senior vice president at the bank.
Next, we have the top news in metal markets.
Iron ore futures fell on Monday, extending last week's losses on persistent worries about demand prospects for the steelmaking ingredient in China and caution ahead of a raft of Chinese economic data releases. The most traded September iron ore on China's Dalian Commodity Exchange fell as much as 2.1% to 760 yuan, $110.52 a ton, its lowest since March 24. Benchmark May iron ore on the Singapore Exchange shed as much as 1.9% to $114.35 a ton, its weakest since January 9.
Tin prices rose as much as 11% in China on Monday to their highest in nearly 2 months after talks circulated in the market of a possible mining ban in major tin ore producer Myanmar, threatening supplies. China, the world's biggest refined tin producer, relied on Myanmar for 77% of its tin ore imports in 2022. It imported 187,260 tons from Myanmar last year, China's customs data showed. From August 1, 2023, work at mines, including exploration, mining and processing, will be suspended, Myanmar's Wa State Central Economic Planning Committee said in a document issued on April 15, seen by Reuters. We will now look at the top news in the agricultural sector. Unilateral action on trade by European Union member states is unacceptable, the bloc's executive said on Sunday, after Poland and Hungary announced bans on grain and other food imports from Ukraine to protect their local agricultural sectors. After Russia's invasion blocked some Black Sea ports, large quantities of Ukrainian grain, which is cheaper than that produced in the European Union, ended up staying in Central European states due to logistical bottlenecks, hitting prices and sales for local farmers. The issue has created a political problem for Poland's ruling Nationalist Law and Justice (PiS) party in an election year, as it has angered people in rural areas where support for PiS is usually high.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.